This is our Forex blog for December 30th, 2011. I just got back from my holiday vacation. And like most days, we really want to buy the strongest currencies versus the weakest and sell the weakest versus the strong. We have the real-time histogram showing the strength and weakness of each one, bar by bar. Underneath that, we have the daily, weekly, and monthly trend. So ideally, we want to find the weekly trend going up, and then when you see some real-time strength, most days it's likely to continue. You can see that's the case here with the yen. It had a lot of strength coming up before midnight. Anything at and above the 80 level is very strong. The daily, weekly, monthly trends up. We had a brief amount of half an hour weakness here, and then the strength resumed. We had about 2.5 hours of weakness here, and then the strength resumed again. That's what happens on most days, especially when the daily trend is up and the weekly trend's up. You can see the dollar by comparison. The daily trend was down as of last night. The weekly trend is just barely up, and the monthly trend is quite strong. It takes quite a while for the monthly trend to change. The euro is one of the weakest currencies, and also is the pound. But the pound today was showing more intensity. It was doing a counter trend day than the euro was. So when you have a weak euro and a strong yen, it's pretty much a no-brainer that you want to sell the euro yen. It's one of the better trades last night. Let's bring that chart up. You can see this currency last night broke out from above the hourly to beneath it. When currencies are underneath the hourly, they're much more likely to go down. You can see if you started trading this, let's say at this point right here, you'd wait for a pullback. We have two different methods of getting into our trades. Pullback trades, you can see this fell from 40 all the way down to about 20. Not much, 15, 18 pip move. Pullback to the hourly and wasn't able to get above it. It was quite strong there the first time, so it's kind of a risky trade, but if you went short, pull back 8 or 9 pips, went sideways, you get out of your trade. It double topped right here at the hourly moving average and had a little bit less strength than before, and then the trend, continued. Another one that was strong is the Australian. Very strong on all time frames, and the euro was weak. This is not a currency that we normally trade. Let's bring this thing up here. Euro Australian, weak euro, strong Australian, very likely to go down, as you can see. And this is what happens most days. When one currency's daily, weekly, monthly trends down, the other one is very strong, you're going to get pullbacks on this. And let's add the containment bands to this, which is the tool that shows hourly moving average and also the extreme levels that are likely to reverse at. I like to put the 1.5 and the 2.0 on here, and most of the time the market will have an extreme counter trend trade at the 3.0 level, which most days doesn't even get hit. So here's the 2.0 level. This was underneath the hourly, and when a currency is weak, when it comes back up to the hourly, it's very frequently is an area of resistance, and then the trend continues. So you can see that the currency worked its way back up to the hourly too around 9:30. This was a counter trend move, and also it was a two-wave move. You drew your fibs off this first wave up. Typically, weak currencies can make two-wave counter trend moves, and then they continue their trends. And typically, they'll move in a two or three-wave move into the trend too. So you can see this pullback trade right here around 27.30. It pulled back 80, 90 pips. Beautiful. You're never going to catch every pip, but you very likely could have made over 50 pips in that trade as it just continued down. Also, one of our best tools is the FX Trend Pro. That's added to this chart. And this combines 5 of our different statistical trend tools. You can see on the way up here, there's a little bit of intensity during this 5-minute bar here, and then it worked its way back up to the hourly with less than extreme weakness. And once you got into that trade, it stayed red the entire way. When it's underneath the 2.0 white band right here, typically you get some counter trend moves in the opposite direction if it's not extremely weak. You can see it was extremely weak because it hit the 80 level. So that was a trend that you wouldn't necessarily want to buy down here because it was extremely weak. When it gets underneath the 2.0 white band, typically it's kind of a risky trade. A lot of times they run out of strength or weakness outside the bands. You can see right now for the last 10 minutes it's extremely weak. If you were in this trade right here on this pullback, you'd stay in it. You're up about 20 pips. but because it's down statistically too far, you want to really watch for any signs of it not continuing and exit, with a smaller profit. The dollar did have a daily trend that was down. The weekly trend was just barely up. So, when you saw weakness like this at 430 followed by half the strength, typically that weakness will continue. In an ideal world, I would like the weekly trend also to be down, which you can see it was from 7. But the yen was strong, and the Australian was strong on all time frames. So after about 4 o'clock, 4:30, buying the Australian dollar made a lot of sense. Here's this currency right here. You can see it had a narrow range pattern. Typically, narrow range patterns, when they show up, when the market breaks out of them, you're going to have big trends. And the first time it did, it barely went up. It went up maybe 10 pips, came back down. You would have got out of that trade with a small loss. But later on, when it broke out, you go long right here with your stop underneath this swing low right here, and you can see it just exploded up. Now, you might have taken a few trades with maybe a small loss, 5 or 10 pip win, 5 or 10 pip win. In the last trade that broke out right here at 79, you got out up here at 45 for a huge 65 pip win. And that's how most people who are profitable make money. You have a lot of trades that have small wins, small losses, a few break-evens, but when you're trading in the direction of all the time frames, real-time momentum's to the upside, daily, weekly trend is very strongly up, the monthly trend slightly up here, mainly because the dollar has a very strong monthly trend as of until about 8 when it significantly weakened. It takes a lot longer for a monthly trend to change. The dollar was weak. We had some strength in the pound. Now the pound, even though it was showing clear signs of it having strength, the daily, weekly, and monthly trends down. You can take trades by buying the pound dollar, but it's a lower odds trade than the Australian dollar where all the time frames are up, or the New Zealand dollar. Let's take a look at the pound dollar. Oops, let me get these out of the way here. All right, you can see this is a beautiful pattern right here. We have two 4-hour narrow range patterns in a row. And typically when you see that, volatility is extremely low, and when it breaks out of there, you tend to have very huge trends. And you can see it shot up about 25 pips here, pulled back, broke out again. You might have made 10 or 15 pips. And then you can see just astronomical 120 pip move up. And again, when it gets above the upper containment band, typically, or I should say rarely, when it's above the upper containment band, does it go beyond the fib target. If you draw your fibs right here, if you bought this pullback right here, this is a perfect place to get out of the trade and also do a counter trend trade. About 25 pips here. Our trading zones showed this is a very high probability resistance area, as was this. You can see it stalled here as resistance, went up to the next area and couldn't get above it. You could have done a counter trend trade here and made 15 to 25 pips, 15 to 25 pips. In this trade, you probably would still be in it because it's falling and it's still up statistically too much. Most of the time when they get way above the upper 2.0 band, you're going to get a 38 to 50% pullback. So 55.07 to 54.87 is an awesome profit target level for this.